Okay, nice to see everybody. My name is Phil Calvert. For those of us that have not met before, I'm the founder of Life Talk, and today we are going to talk about something which doesn't really get talked about enough throughout this industry, across this profession. Back in the day, in the late 70s, early 80s, when I was a young broker rep, we didn't have the internet, so financial advisors tended to go about getting their business in much more old school ways. Um, Referrals, obviously, trade shows, networking events, and relationships with estate agents, particularly building society managers and accountants. And somewhere along the way, the accountancy thing just dropped off a cliff. I know that there are financial advisors and financial planners who attract business by relationships with accountants, but I was absolutely thrilled to meet our guest today, Johnny Ridd, who's founder and CEO of RQ. RQ is a referral management platform. He's one of these guys. I wish I'd met him years ago, because the value that he has to share is kind of off the scale. And we were presenting at an event recently for a technology company, and it was great to see that technology company really appreciating that relationships with accountants and the wider professions is something really, really important. So I'm going to keep quiet for a while, which is, I'm sure, great for everybody. And I'm going to hand over to Johnny. And if you've got any questions, please put them in the chat and we'll try and feed them through to Johnny. We are recording this today and we'll make sure that everybody gets a copy if you have to jump off early. Over to you, Johnny.
Great, thanks, Phil. Well, that's quite the introduction, and that's I've got something to live up to there. But thank you very much indeed for having me, and thank you all for joining live, and for those that are going to be watching this back later. So, what I thought I'd do is give you a very quick 30 seconds on our business and me, just for context, and then come to the question of professional connections. And I want to do sort of three things. One is make the case for why I think, like Phil does, professional connections is the single most exciting organic growth lever you have. I want to make that case. I then want to talk about how you can go from where you are today, wherever that might be, whether you get a few referrals today or whether you're a cold start, some of the things that you can do to run a process to start getting more referrals. And then I really wanted to leave you with the thought that this isn't an overnight thing that will happen instantaneously. It's not a tap you can turn on. It does take time to build in, but it is worth it. And so you need to have a deliberate strategy, and you need to be, like anything in life, persistent and keep going, but it is worth it. So if I start briefly with RQ, so we are a technology business fundamentally. We're a referral management platform that connects accountants, lawyers, financial advisors, and others so that they can come together, compliantly originate client referrals, so get to know their clients better, spot opportunities to refer them to adjacent professionals, do that referral in a compliant way, share income through us if they want to in a compliant way, and also carry out due diligence on one another. The platform's been developed in collaboration with the Institute of Chartered Accountants. So we've got a formal collaborative agreement with the Institute. They promote us, are promoting us at an increasing rate to their 12,500 member firms. We have an ongoing dialogue with them. They've fed into the development of the platform itself to ensure it's compliant, but also to offer something really of value to their membership. And they see collaboration with you guys as a key route to them elevating their service proposition. Because don't forget, for your average high street accountancy firm, the lion's share of their business still comes in the form of compliance work, that is delivering accounts, filing tax returns, but we all know that technology is quickly eating into the margins there. So how do you offer value to the 90% of business owners that form your client base? Well, the sorts of personal financial planning activities you guys undertake is a critical route, and the Institute acknowledges that. So really exciting to see them collaborate with us, I think, for the market generally. So by all means, at the end of this call, if you want to reach out to me, if you want to schedule a demo of the platform or talk to us about our consulting proposition, please do. So the question at hand, if we look today at where most financial planning firms grow, and I'd be curious to know the extent to which this is true on this call, when we speak to planning firms, it's always the sort of same four channels that they get organic growth from. So I'm not talking here about buying books, business, buying advisor or client banks. It's word of mouth. Okay, so happy existing clients referring new clients to you. It is professional referrals in some shape or form, whether that's the second rank or the third. most firms will get a trickle of referrals from accountants, from lawyers here and there. But really the question today is it worth doubling down on that? And if so, how do you turn that into a more regular flow of business? The third channel is existing clients topping up. So they might not have given you all of their assets to begin with. Gradually, over the course of time, they might give more to you. And then there's the sort of direct marketing, of which Phil is expert. That's the sort of PPC and more what you might think of as conventional marketing, and how you make that work for you. Those are really the four main channels. But I want to make the case that the professionals channel is in many respects the most interesting for four main reasons. Number one, there are tens of thousands of accountants, lawyers, estate agents, business coaches, insurance brokers out there in the UK, tens of thousands of them. Okay, there is a colossal opportunity, and a number of those relationships, a number of those professionals either don't have relationships today, or are not overly happy with the referral partners that they do have today. And so, if you look at the stats, anywhere between 60 to 70% of firms are either would happily speak to a new financial planner to work with, or they'd be open to collaborating with one for the first time. And certainly it's the case in the US. The research that Raymond James and others have done suggests that 70% of new clients come to advisors through either their attorney, as they call them in the States, or their accountant relationship. And so that referral is such an important route for a number of certainly wealthier clients to get introduced to a financial planning firm. And that's the third point I want to make, which is that these clients are often ideal. Okay, they're ideal in the sense that they're used to paying for professional advice, they're used to delegating to professionals, but also they, almost by virtue of having an accountant or a lawyer, are far more likely to have complex affairs and more likely to have more money, but also just more complex affairs, which is where you guys and your planning expertise comes into its own. So they're more likely to be ideal clients. And the other point is, you get leverage because you develop a deep relationship with an individual or a series of partners at a firm that leverages you into their wider client base. And if you do a good enough job, you become part of their process. So each time they speak to a new client or they do an annual review, you get into a position where they're thinking about the financial planning implications of what they are doing, or the opportunities more generally. And so they leverage you into the 60, 100 new clients they're seeing every year, and potentially the thousands of clients they have today. And so that is why I think professionals is in many respects the most interesting channel. And so if you take that and then you come back to our four areas and you ask yourself, well, where's the greatest amount of headroom? So new opportunities to go after. What's the rate at which they convert to being clients once I first met with them? And what's the average value of those clients I convert? You'd say word of mouth, well, there's a limit to how many more you can get after because you've only got a certain number of clients today. So that will soon peter out, though it is a great channel. They convert very high, but they will typically reflect your average client size today, which could be very good, but it's not going to be necessarily on average higher. Professionals, by contrast, lots to go after, as I say, very high conversion rates because they've been referred by their accountant, by their lawyer, who they will trust. And on average, because they've got more complex affairs, the value to you is that bit higher. And so that's really why I want, if you come away with nothing else today, it's, okay, maybe I should look again at the opportunity that Professional Connections offers me. The thing to mention, though, is when you're going to set about doing this, whether you just want to do a little bit more than you're doing today, or you're starting from a cold start, you need to be aware of their context. You need to be aware of what the skeptical lawyer, the skeptical accountant will be thinking, and the sort of big five barriers as we see them that you're going to have to try and overcome at some point. And in no particular order, they are, what's in it for me? Okay, so why should I, the accountant, the lawyer, be motivated to refer to you? And I'm not here talking about commercial, certainly not in the first instance. What I'm talking about is, what are the problems that you, the financial planner, solve for me as the corporate finance professional, the accountant, the lawyer? What are you helping me get off my desk? What's that problem you're helping me solve? Are you reflecting on me as a client? Are you helping me, if I'm corporate finance, get that client to a more realistic exit value? And so you're helping me get a deal done. What are you helping? What's in it for me to be motivated to refer to you? There is also the angle of you help me as a financial planner help me get to know my clients better. So if I'm a lawyer, I have cases. I don't typically have clients. If I'm an accountant, I have a limited company or a set of accounts. You help me get to know that individual better because you have a far deeper relationship. And then certainly there is the commercial element, which we can come on to later. The second big barrier is trust. And I saw it over emails just last week, in fact. Clients, or certainly some professionals, still think of financial advice as shiny suited financial product salespeople interested in the money and the assets, not the clients. And so there is still this perception barrier for some. We all know that the planning professions come on leaps and bounds, but there are still skeptics out there, cynics out there, who like to think themselves at a higher professional plane than planning. That's wrong, but you need to know that and overcome it proactively. The third is that actually they don't know their clients very well. That's the reality. As I say, lawyers have cases, accountants know the accounts, and it's all retrospective. They don't know the business owners they look after. They don't know what their objectives are. They don't know if they've got a pension, oftentimes, whether they've got wider assets, whether they're due to inherit, what their plans are. Are they planning on selling their business in a few years? This is data that, as a matter of course, clients don't always share with their accountants, with their lawyers. And so absent that data, they are not going to be good proactive referrers to you as their planner. So you need to help them bridge that gap. The other two on this slide, compliance. So compliance and friction. Compliance, you may not be familiar with this. Certainly in the ICAW, the SRA context, there are certain things that accountants, lawyers have had drummed into them over the years about how you refer to FCA regulated entities, how you refer within the guardrails set out in the so-called designated professional body license. A small example of this: if you are a chartered accountant that is regulated by the Institute or ICAS or other, and you want to refer your client for some advice around pensions, you need to have something called a DPD license to pass the client's details directly to the financial advisor. Okay, so there are certain categories of referral where sharing the information directly to the advisor needs a license. They need to record it. They need to report on it every year to their regulators. And there's a number of other nuances to that compliance landscape. So again, a lot of accountants, whether they articulate it up front or not, will have these constraints at the back of their mind. So you need to be able to help them understand how you can, ideally by using RQ, but more generally, you can help them navigate their compliance landscape and collaborate with you. Final point, friction. There's the age-old thing around referrals. I've referred my clients across. What are you doing with them? Make sure you over-communicate when you're meeting client, invite them to shared client meetings, all that good stuff. But there are, I think, ways that technology can help with that seamless sharing so that it feels like it's not a referral. You are an extension of their team. But again, you need an answer for that, and you need to make sure you provide a mechanism for seamless sharing and avoid that friction. And final point, you need to be patient, deliberate, and consistent. As I said at the beginning, this isn't a tap you can turn on, but it doesn't mean the opportunity is not there. Believe me, for all those reasons I mentioned earlier. And the other thing I would say is that in many respects, the trends are on your side. So yes, you need to be patient, deliberate, and stick with it. But actually, there are lots of examples that this is what the market is crying out for. That's why you're seeing the growth of multidisciplinary practices. Okay, so there are a number in the financial advice land of hoovering up accountants, law firms, and adding on these multidisciplinary services. That's because they're matching the rising demands of clients. And again, the accountancy firm context here is margins for core compliance work under pressure, rising client expectations more generally because everyone knows that they want immediacy. Technology means they shouldn't have to wait for answers. They shouldn't be billed for things that tech can automate. So there is increasing pressure on accountants, and they are looking for, in a way I think they haven't been for a while, to build out ancillary services and offerings. And really now is a moment for multidisciplinary practices, multidisciplinary opportunities. There are multiple different ways you can do this. You can either do it by, if you're a bigger firm, going and having those in-house. But really, I think the optimal delivery of this for most firms of the size I think on this call and more generally are build these deep relationships with loads of referral partners and networks, and the client gets a joined up multidisciplinary experience. That's really what you're trying to deliver. So that's the sort of preamble. So 2 points made there. One is the opportunity is big, demands your attention, I would argue. Number two, but you've got to be patient and you've got to understand the context of the skeptical professional and have that context in mind. How then do you go about where you are today with the level of referrals you get, the varying degrees of sophistication, perhaps with your referral routes, how do you sort of follow a process to really start turning this into an engine of growth, which is what it has the potential to be. And there's sort of 6 steps on screen there that I want to take you through very briefly. So at the very least, hopefully you come away with, okay, I've got a couple of actions that I can take away from this call. The first, I would argue, is to just look at what you do today. And I think you would be surprised on the amount of referral business you do get today and how valuable it is to your practice. So a very simple spreadsheet on screen here for you to go away with your team, and I would argue populate and just note down how many referrals have we had, what's the name of the firm, what does the firm do, who in my firm owns the relationship with that individual, who is the individual, and then over the course of the last 12 months, all time, how many clients have they referred, what proportion have progressed, what level of annual fee is that yielded. And we've done this exercise a number of times with firms. I think that will be quite enlightening, and you will realise that actually crumbs. Many of our most valuable clients have come through accountants, through lawyers, or other professionals more generally. And this really, there's a very clear opportunity there. And at the very least, you should be gathering this data anyway. So you should have this to hand. I know a lot of firms don't, but you should be able to look at this because this is a very important way that your firm grows. And then the next thing to do is make sure you just eyeball that list and say, actually, what's the opportunity set within that firm? Because it could be that you've had 3 referrals, but actually that firm's only got, for the sake of argument, 10 clients. There's very little opportunity there. Versus, actually, we've had a few referrals from this firm. They're a 4-partner firm with 2 offices. We could be doing an awful lot more. Or they're a 10-partner firm with 10 offices, whatever it might be. Zero in on those that have got the headroom, and schedule a meeting with them and have a conversation. How do we take this to the next level? Here are the clients we share. This is what we've done for them. This is what they say. I'd like to explore if we can do something more substantive and take them through how you might step up the activity, what's in it for them. And again, we've got a sort of process that you can run in that particular conversation. But just doing that, I think you will identify a couple of opportunities and go and schedule a practice conversation. The next thing to do as part of this sort of mapping exercise is to map out where your shared advisors are with the clients you look after today. So again, very simple exercise. Next time you speak to clients, as part of your annual review, when you first onboard them, make a note of who are the clients, who are the advisors in common or the adjacent advisors. So who are the firms, who are the individuals they work with, how many clients have you got in common? Again, I think you'll find that there will be a few professionals that you've got overlapping clients with that perhaps have never referred to you, proactively. There's an opportunity for a conversation there because you look after the same clients. And invite them to the next meeting with the consent of the client, obviously, go and have a conversation with them. Because, and again, talk to your clients about this and say, who do you recommend for X, Y, Z? And use this as a route to building out your network. So those 2 exercises will identify professionals that have either worked with you in the past or have the opportunity to refer to you've got shared clients with. So you should absolutely do that. And you should have a process. It shouldn't be overkill, but you should have a note in the diary, meet them every quarter, every half year, touch base and make sure that you've actually got a plan and you're actually working together more proactively and try and understand what you can do for them to offer more value. Stage 2, if you're trying to be a little bit more proactive about this, first take a step back and say, who are my ideal clients? So who are the clients that I have the highest impact for, I most enjoy working with, and the most productive, or profitable, I should say, for my practice. And do it in hard number terms. So, what the age, personality, where they're based, how much they earn, what's their occupation. And then talk to them about why they came to you, what the value you offer in their words is, and what the problems you solve for them, again, in their own language, and try and understand what their planning needs are, and talk to them about which other advisors they have. And I would say, identify your most valuable clients, whatever that top 20% is, and actually talk to them and be completely transparent about why you're talking to them. We're doing an exercise, we're looking to grow, we've offered a lot of value to you. Can we have 15 minutes just to talk about your experience working with us and other professionals you speak to and work with? This will crystallize who your ideal clients are. And you should, if you've done this exercise properly, come away with quite a specific ideal client profile. So specific doesn't mean retiring individuals. That's way too vague. And Phil does a very good job talking about this better than I will in terms of how to find and really articulate your ideal clients. Keep asking so you get to something with a high degree of specificity, and that is your niche. And then around that niche, you build and map the professionals and go and proactively speak to them. And it's way more compelling reaching out cold to a professional via an introduction if you have a really crystal clear articulation of who your clients are, especially if it matches onto them. So that's a really solid base to start. Once you've done that, you then want to, and you've mapped out, right, here are my ideal clients, here are professionals I've worked with in the past, here are potential professionals I could work with and people we can introduce them to, or the sort of category of professionals that come in and out of that client's life. You now want to go and say, well, how do I match the value that I add to my clients, the problems I solve to them, to the problems that the professional will have as well? And it's really important to cast a wide net here and keep an open mind. Don't just think lawyers and accountants. There are loads of professions out there who work with the sorts of clients you come into, the sort of clients that you work with as well. And so you should be fishing in adjacent ponds and speaking with them. And it could be all sorts of different professionals, business coaches, FX brokers. We had a firm last week who was running an event with a high-end kitchen appliance company. They did a launch event there because they come into contact with wealthy clients of the sort that they deal with, estate agents and so on. And a really good example of this, and there are plenty of others, but a really good concrete example of this process done well is, we, the financial planning firm, help clients understand how much is enough in the business sale. And by doing that, it's typically lower than their sort of ego-driven number. We can work with corporate finance houses and help them get more deals done because the professional that's looking to exit has a more realistic number that they attach to their sale. So that's the very clear value that we add to corporate finance houses. They bring us in, we do our thing, and by virtue of us doing a good job, we recalibrate the expectations of the client in a way that's in their best interest. We get more deals done. That's a really powerful example of this done well, mapping the value you add, the problems you solve, and mapping that onto the professionals and what they're trying to achieve. The next thing you need to do as part of this process is make sure you have a very clear proposition. And this proposition document is ideally one page. As I said before, it has, with a high degree of specificity, the clients you look after, and it encapsulates what working with you as the professional firm, what they can expect, the value they'll get, and set some expectations around the working relationship. You have it nailed, and it's emphatic, okay? And it's a document that you can produce either at any point in the relationship when you're first, maybe kind of second, third meeting with them, or as a matter of course. You need to be very clear on why we are set up to work with professionals, how we help their clients, how we help them. And this is exactly what our ideal clients are. And this is a living document. So you'll refine this over time and it will get stronger and stronger. We then come to the outreach stage. Okay, so I suspect 9 times out of 10, the professionals that you will do most business with over the coming year, if you really put your foot down, will actually be those you already know and have already done a little bit by way of referrals. But it's just about putting more structure, being more deliberate, being more proactive about it. However, for those that are really ambitious and really want to get moving, there's obviously outreach, okay, sort of cold outreach. Ideally, you secure introductions from mutual contacts. That's the proper way of networking. So if you can see people who've got contacts in common on LinkedIn, ask them for introductions. You're far more likely to get the conversation going, and secure that meeting and follow up. Email, phone call, and so on, in-person networking. Get to a meeting, and in that first meeting, the crucial thing is focusing on them. Get them to speak, not go straight into a pitch about your firm, but dwell on what are they trying to do, where are their problems, where are their challenges, and what are they looking to achieve? And are they motivated to grow? Do they match your ambitions? Do you have a personality fit? And if they're not, there's no point pitching to them. Okay, if you're not on the same page as them, if you don't get on well, move on. Don't take it personally. There are plenty more fish on the sea. There are tens of thousands of accountants, lawyers, corporate finance houses. There are plenty out there. You only actually need sort of 5 or 6, if they're of a certain size, really working well to take, have an order of magnitude impact on the growth of your practice. So again, don't get hung up if there isn't the opportunity there, if they're not the right fit, if they're not looking to grow, if they're overly nervous about talking to clients about new areas, and so on and so on. It's not, not worth it. when you're then in a position where you've had a meeting with a firm, they've referred a bit of business, you've had that conversation about taking the relationship to this more substantive level, which I argue would almost 8 times out of 10 should involve a consideration on commercial agreements, setting of objectives, agreeing to regular touch points. It's then about how do you embed and track and grow over time. And as with anything in life, this isn't complicated. It's about setting expectations, over communicating, and working ideally out of their offices if you can, but certainly having regular touch points in the course of the relationship. And it's really important though that you are deliberate about this. You do over communicate and you share all of that shared updates on clients because it's incredibly reassuring. And in our product, you kind of have no excuse, right? A lot of firms will have a shared Google Sheet, which doesn't really do the job in my view. Others have tried to buy Monday.com or other off-the-shelf software packages to facilitate that sharing of client information. Whatever you use, just make sure you are giving lots of updates to the professional. They feel really involved. They're reassured. They can see and they've got visibility on what you're doing with shared clients. It amazes me the number of times we speak to a financial planning firm that have got, we've got 10 referrals from accountants and lawyers. Great. How often are you updating about what you're doing with them? Well, never. They'll wait for them to email me. No. Take ownership because that's you. You treat them as a client. Okay, the professional introducer is a client, just as their clients are clients of yours. So be deliberate and over-communicate them, set expectations. It just keeps you front of mind. Just doing that will yield a few more referrals, I'm sure of it. So that's it, really. I mean, nothing here is particularly, I don't think, rocket science. But in summary, I think if you're not looking to grow, or growth is not a priority, organic growth that is, then I would say don't bother with this, okay? Because you do have to be patient, you do have to be deliberate about it, and it isn't an overnight hack that's suddenly going to turn a tap and you suddenly get a flood of business. However, there is huge opportunity out there. There are plenty of examples of firms who've done this really well. We've got plenty of case studies that we could share. And the opportunity demands a deliberate strategy. You need one person who owns it, you need the whole firm on board, and you need to make sure that you are deliberate about executing against the opportunity. Do go ahead as a first instance, if you don't do it already, map your existing referrals and benchmark your activity today. There will be adjacent opportunities. I know there will be. Make sure you do have a document that clearly articulates how you can work with them and who your ideal clients are. If you meet a firm for the first time or the second time and they're not a fit, don't worry about it. Don't take it personally. Move on. There are plenty more that you will gel with and mesh with. Do consider commercializing the opportunity in a way that works for your business model. If you don't, you're left slightly exposed, but don't lead the discussion with it. Obviously, don't go in saying, listen, I'm a chartered financial planning firm. This is how great I am. We'll pay away income to you if you refer clients. So it's a terrible way to open the conversation. First, establish what their needs are. Show credibility on the clients you have. You know your onions and how you can add value to them. Then you can bring commercials in if they ask, great, but bring it in later. Don't leave with the conversation. It doesn't work. And throughout the course of that relationship, make sure you over communicate. Make sure you set regular touch points and embed those. Be patient, consistent, relentless, and absolutely use our product because it will help you do all of the above. And final thing I would say is if you're interested in the tech, do visit our website, book a call, or feel free to drop me an email if you'd like a 30-minute consultation about your strategy. I'm happy to help.
Johnny, it was absolutely fantastic. Thank you so much. One thing that really strikes me, what you were saying about there, is the size of the opportunity. If an advice firm is prepared to put the effort in, hadn't really occurred to me there. I love the concept of over communicating as well. That's really powerful. I just want a couple of issues. Can you just touch a bit more on the compliance side? You mentioned this. Is it a DPD license or something? How does an advisor know whether or not an accountancy firm might be able to work with them or not?
Yeah, that's a good question. So first point is you don't need a DPD license to work with an accountancy firm. So the accounting firm doesn't need it to refer to a financial advisor. What it does do is it means that the accounting firm can work a little bit more seamlessly with you. Okay, so they can share client information more directly, and they can be a little bit more closely involved in the advice process if they want to be. So if the client goes back to the accountant and says, the financial planner has said this, what do you make of it? If they've got a DPP license, they can provide a little bit of commentary, reassurance, and help sort of get the deal done, for want of a better phrase. So it definitely helps. And it is a signal that you're, potentially they're like to be a good firm that takes compliance seriously and everything else. In terms of how you can find out whether a firm has it, there are two ways of doing it. The first is you can actually go onto the FCA's Financial Services Register online, and you can search for the accountancy firm name. And if they have a license, they will actually come up on the register, and they will appear as what's known as an exempt professional firm, EPF. And rather than having an FRN number, they will have the prefix of their regulator, then a number. So if they're an ICAW firm with a license, it will be ICAW, blah, 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 ACCA, blah, blah, blah. There are, without wanting to bore you, there are 11 designated professional bodies, of which the ICAW is one, the Law Society, the SRA are others, and they're designated by the Treasury. And the whole point of it, back in the day when the Financial Services Markets Act was introduced, was to ensure that firms didn't need to be dual regulated. And they acknowledged that professionals like solicitors, like estate agents and others, would sometimes, by way of business, get dragged into what was now being caught by FCA regulation. So the prudent approach was, let's give the professional bodies a carve out of FCA regulation. We'll leave it on them under this DPP regime to regulate and provide oversight for their firms. ICAW has 2,000 member firms that have it, 10,000 don't have it. However, if you look at the activity of the firm, you would argue that about 8,000 should have it, and 4,000 don't. So that's the big sort of context for why we've joined up with the Institute, is to help them get their member firms compliant, because they know that firms are unwittingly breaking rules and straying over that regulated advice hurdle. And our platform gives the accountant peace of mind, and it makes sure that they can't sort of stray out of the regulatory guardrails.
Right, interesting. And Nick's asked, can you sort of give us an outline of what your tech actually does and how it can help?
Yeah, sure. There are a number of different angles to it, but in its simplest form, it's a web application that facilitates referrals in a compliant way. And so your classic use case of an accountant referring to a financial planner, the accountant signs up, they invite their panel, which can be their professional network. They have insurance brokers on there, solicitors, it's open to whoever they refer clients to, and they refer to you, the financial planner, a few clicks. Those few clicks are compliant. So they've been designed with the Institute. This is the way that you refer clients across. It handles disclosures, informed consent, end-to-end automatically. And then it's a compliant means of communicating around those shared clients. So that's one aspect of it, compliant referral management. The beauty of it is it integrates into your inbox, so you can access it via Outlook. And it's also currently we're building integrations with back office systems as well. So at the moment, we're hoping to go live with Intelliflo in the new year. So you can interact with RQ, communicating compliant with your introducers without having to actually log into it. Planner as well is on the roadmap, Nick, as is Curo and others, to answer your question there. So that's one component of it. The other component of it is compliant fee sharing. So for those of you that do share income, one of the reasons that accountants get tripped up or they don't like to enter into commercial agreements is because the Institute is very, very specific, as is the SRA, about how you disclose it, how you handle it. It's an administrative nightmare. And some firms have got it wrong, and the Institute orders them to pay back commissions, which can run into the hundreds of thousands, so they can put a firm out of business. So they're right to be wary of it. But our platform automates it completely. Again, it's been built with the Institute, signed off by the Institute. And so we completely streamline that mechanism for sharing income. That's the second big feature. The third big feature is Compass. So Compass is a financial planning diagnostic tool. And we're trying to tackle that challenge of, I, the accountant, don't know my clients. What Compass does is it gives the accountant, the solicitor, the tools to get to know their clients better. So they distribute what is effectively a questionnaire. They can do it in person. The client can do it in their own time. Client answers a series of questions about their plans. Are they planning on selling their business? Do they have a pension? Do they have cross options agreements? Whatever it might be. It builds a report, and it also suggests a conversation with you, their financial planning firm that they refer clients to. So it creates a seamless, compliant bridge that doesn't open up the accountant solicitor to new work, that generates more referrals as well. And that's depending on the ambitions of the accounting firm, that in some respects is the thing they're most excited by. The compliance is sort of, I need it like I just need to do it. The bit they get animated about is Compass, because they learn so much more about their clients and it's useful for them. And obviously, in most instances, very useful for you guys as well, because it's originating those referral opportunities. So hopefully that's enough of a concrete explanation of what we do. Another follow-up from Nick there. I presume both accountant advice firms buy a tech license use it? No, actually. So there's a bit of nuance to this. We have a tiered charging system. There is the core platform license, and then there are bolt-on features. ICAW chartered accountants get core platform for free. That's the deal we've done with the Institute. And they can invite, anyone they invite gets the relationship with them for free. Okay. Similarly, for a financial advice firm, you guys pay, you invite an unlimited number of your network, they sign up, and they, with you, don't have to pay anything. If they then onward invited their network, the platform becomes chargeable because they've been invited by you, they don't pay. So point one depends if you're a chartered accountant or not. Point two, are you being involved? Are you doing the inviting? That dictates the license.
Yeah, that's really interesting. Thank you. What's coming over to me loud and clear is that I love what you said about this is not a referral, and it's important to be seen as an extension of their team, which suggests to me that building these relationships goes way beyond let's have a beer every other Friday. It's much more integrated for each other's benefit. I remember I met at a conference once. A financial planner introduced himself as the largest and the most successful financial planning firm in Australia and New Zealand. And I kind of asked him, how have you done this? And he said, through really trying to build deep relationships with accountants. He said, to the extent that we actually go out of our way to train accountants how to be financial planners. I was thinking, okay, why would you want to do that? And he said, well, accountants don't want to be financial planners. They've had the chance to do that and they've chosen not to do it. He said, but my goodness, do they value that level of training? And he said, as a result of spending a fair bit of money and investment on training accountants what financial planners do and how, and even to the level of getting their qualifications, he said the quality of the referrals and the introductions that we have subsequently had have been literally way better than anything we've seen in the past. And that just suggests to me that kind of real close relationship makes a difference.
Yeah, I mean, that's not for everyone. That's very unusual, but really smart. And I think you are up against the challenge that everyone, it seems to me, feels busier than ever. Everyone feels more under pressure than ever, and you've got to be. I think if you spoon feed them, and you can train them, that's a good thing. Especially as it's worth noting actually that the Institute and others have recently changed their CPD rules. So it used to be until recently that they could go away, get training and self-certify. They've now gone back on that and said, actually, you have to attend CPD accredited training. And so there is that opportunity again for you guys to deliver training in a CPD wrapper, because they now need to, as of, I think this month, in fact, it's very recent, they have to start evidencing that again. So I think training is a big part of this for sure.
Fantastic. Johnny, this has been fantastic. In 45 minutes, we've learned more about this than in a lifetime of doing this. So absolutely fantastic. And you're happy for people to come and find you on LinkedIn and connect with you and take up your offer?
Of course, very happy to. My email is johnny@rq.app. Come to our website, book a call as you wish. Yeah, absolutely. Very happy to do that.
Fantastic. That's great. So unless anybody has got any more questions or anything like that, I'm sure you'll be happy to take any offline as well. Really appreciate your time today. I know you're busy, and just want to say thank you to everybody for turning up today. Really appreciate that as well. And we'll catch up again soon. Take care, everybody. Thanks, Johnny.
Thanks, Phil. Thanks, everybody. Thank you.